Hey, what's up, everybody? Welcome to this week's Real Estate Weekly Lesson. I am your host, Greg, here, and thank you for watching and listening, depending on how you're consuming this. Today, I'm going to talk about 1031 exchange and why it makes sense to do it, when you should do it, what is it you're going to learn, the basics and the nuts and bolts on the 1031 exchange. Before I get into that, though, if you are not familiar with who I am, I've been a full-time real estate investor now for a decade. I've done at this point about 500 properties that have been successfully transacted. I own a good amount of rental properties, and I've learned a lot of lessons, and I'm going to continue to learn a lot of lessons in this business. And I love sharing what I've learned. So if you get value from this video and you're watching, if you do me a favor and subscribe to the channel, like the video, if you can share this with somebody else who you think would benefit from it, it would really mean a lot to me. So let's get into the 1031 exchange. I'm going to start with what it actually is. You're basically exchanging, hence the word, one rental for a different rental that is of equal or greater value. So you're selling a property. This might be a bad definition, so talk to your accountant. But you're selling a property, and instead of paying the capital gains taxes, you're exchanging the property you sold with a different property that is either the same or more value, and you're deferring your gain, which you would have paid if you sold it outright, to a future date when you ultimately sell your properties in the future. So let's say you buy a property for 100,000, you own it for 4 years, and then you sell it for 200,000, right? There's $100,000 of capital gains there. Instead of selling it for 200,000 and getting the money, you use that money to buy a different property that's an investment property of same or higher value. But basically, you're deferring your taxes by exchanging your property into a better property. And the way I look at it, like knucklehead terms, is like how I like to think, is you're recycling your equity, and you're taking your equity from one property that might not be the best place for your equity. Like, let's say you have 500 grand of equity in one property and the equity is just sitting there, not doing anything, like not making a great return. Instead of selling it out and paying taxes, you could take the equity that you have and you can exchange it into a property that might have a higher return on equity or a higher return on cash or cash on cash return. And what you could do when you do these 1031 exchanges is you can go from a little to a lot in a reasonable amount of time. Let's say you start with, a little condo that you own, a $50,000 condo. And then in 4 years, the condo is worth $100,000. And then you got a $50,000 spread between what you paid for it and what you're selling it for. Now that 50 grand, you could sell the condo for 100. Let's say you own it with no mortgage. So you're getting basically 100 minus commissions and fees. And you put the 90 grand down on, let's say, a $300,000 multifamily property, right? Now you own a $300,000 property you bought. And let's say in 5 years, that thing's worth 500,000. You sell it, right? You take your gain of whatever, you move it into a, 10 unit property, and you see what you're doing. You're just trading up into bigger and better properties. And you only started with that little $50,000 condo. So you can really snowball your wealth with these 1031 exchanges. And the way that I look at it is, I actually learned this from a guy out in Seattle, James Daner, who's a huge flipper and landlord out here in Washington. Good dude. And he was talking about, you want to look at your return on equity. Like, what is the return on equity? You might get a good return on cash, like your money might be making a good return. But if you don't look at the equity you have and the return you're getting on that equity, you're missing the ball. So like, I own a bunch of properties where I have tons of equity in them, but the return I'm getting on that equity isn't that good because I'm only getting a certain amount of rent, and there's like, hundreds of thousands of equity on these properties. So my return on equity doesn't make sense. My cash on cash return on most of them is infinite because I have no money in the deal because I already refinanced my basis out. So you got to look at the return on equity, which is just based on the equity on the property, how much income is that property netting you? So let's say you have a property with $200,000 worth of net equity, right? And let's say that property makes $500 a month of cash flow. So 500 times 12 is 6 grand. And let's say you have 200K worth of equity in that property. You're making a 3% return on equity, which is really bad. So in that would be a good 1031 candidate if you can find a property that produces a higher yield for you. So that is the kind of like the mechanics and the nuts and bolts of it. This is where you need to understand how these work. So when you're doing a 1031 exchange, you have 45 days to identify your next property. And then once you hit that mark, you then have, I think, 180 days to close on that next property. So essentially you got 7.5 months to move from one property to the next property. The way that it works, and I'm doing one right now, is when you sell your property, you have to hire a 1031 intermediary to collect that money at the closing and hold it in a 1031 account. And that money sits there until you find your next property to buy. And then they send the money over to the title company or the attorney. So you sell your investment property, you declare that you're going to 1031 it, you fill out some paperwork. At the closing, the money that's owed to you goes to the 1031 company, and that money sits there until you identify and close on your next investment property. So the money actually never goes to you. It goes to that 1031 company, and that's how it stays compliant, right? So that's how it works. So the key here with the 1031, this is the mistake that people make, is you got to look at your next property that you're planning at 1031, and you got to make sure that that property is a better return and a better overall investment than the one that you're selling. Because the last thing you want to do is sell one of your properties and then 1031 into a terrible property just because you have to. Like, you don't want to be under the gun to do a 1031. That wasn't supposed to rhyme either. So you got to run the numbers and make sure that it makes sense. And you want to have a good amount of lead flow and deal flow to where you have all these opportunities coming up, because you really only have 45 days to identify that next property. You got to act quickly, and you got to have a good pipeline of deal flow, and you got to be getting after it every day in order to find that property. So that's a little tip for you there on that. So just to end this video, and I'm going to do an actual real estate deal breakdown on the 1031 exchange I'm doing. I came to the conclusion on one of my rentals that it made no sense to keep it because of some unfortunate situations that happened at the property and the condition that it was in. So I decided at that point to sell the property, and I didn't plan to 1031 it until I ran into the neighbor, and I convinced the neighbor to sell me the property, and I'm 1031ing into the neighbor's property. So that's a little teaser for you. I'll do a deal breakdown on the mechanics on that. But hopefully you enjoyed this definition of 1031s and how it works. I'm doing it myself, and I recommend if you're a landlord, you consider doing this if you have some properties you want to trade the equity up on. So if you got value from this, once again, subscribe to the channel, like the video. And if you are in the Hudson Valley or the Seattle area or the state of Delaware and you have a house you want to wholesale to me, I'd love to buy it if the numbers make sense. Or if you want to just wholesale it with me together, we can JV wholesale it as well. Email me, greg@velocityhousebuyers.com, or send me a DM on Instagram at grego_37, and I'll see you on the next REI weekly lesson.